Half an hour away from the opens in Hong Kong, Shenzhen, and Shanghai. You're watching the China Show. I'm Yvonne with David Ingles.
Good morning. Let's get to your top stories today. Stocks across the Asia Pacific facing headwinds after Wall Street's rally takes a breather. The dollar is under pressure against the yen and other regional currencies. Now, also ahead on the show, a Bloomberg scoop. China considers allowing local governments to issue special bonds for buying unsold homes after earlier measures have failed to so far prop up the housing market. Plus, this hour, Tesla suppliers will be in focus as the EU prepares to slap an additional 9% tariff on the company's China-made cars.
All right, we're seeing stocks not gaining too much traction here and really struggling to make some headway after what has been a pretty furious rally that we saw in the U.S. So they were not able to get that ninth day of gains in the S&P, which would have actually been the longest winning streak in about, 20 years or so, I believe. But we're taking a look at a breather here this morning when it comes to equities. S&P futures are slightly punching higher. The dollar, though, continues that decline just slightly. But we're watching very closely FX markets, right? When we have year-to-date highs for the euro, for the pound, renminbi as well. Dollar yen, we're seeing that bit of weakness, though, today, 145.56. But we are still testing those lows for dollar yen since we saw in August of this month. So certainly that's one to watch. Certainly, of course, you have the likes of Commerzbank, the latest to chime in, and those speculative bets that the BOJ is going to hike again this year are starting to build again. So they still think that structural weakness in the yen could actually continue. We will see, though. But we'll take a look at when it comes to Brent markets and commodity markets. Seems to have stabilized a bit here as well. You take a look at how Asia FX is doing, right? So we have an Indonesia rate decision. We have one from the Bank of Thailand today. BOK happens in about 24 hours or so. And there you go. You continue to see some strength building in the Thai baht, in the Malaysian ringgit here this morning. So that Asia FX trade is still going on for another day. Taiwan dollar just coming online, and we are still seeing some decent gains there as well. But watch the open in China today, because what we saw in the ADRs last night, the Nasdaq Golden Dragon fell some 4%. That's the biggest drop we've seen in about 4 months. What was dragging that was some of the EV makers, Xpeng certainly. Those earnings disappointed investors there, so we'll watch how that plays out in the Hong Kong session. Futures are looking like this here this morning. Keep in mind, we talked about the onshore and offshore. Renminbi did hit another high. Morgan Stanley now talking about MSCI cutting those 12-month targets now to 56. I believe on these deflationary risks, I think they have 11,000 or so for Hang Seng. That's certainly one to watch as well. And we'll talk a little bit more of that later. But yeah, futures are pointing negative this morning, Dave.
Yeah, 17,000.
Sorry,
on the
Hang Seng
Index.
Yes.
11,000 is doomsday. They did cut it by 11%, though, to your point, and the preference is really for onshore China. We'll get you those new targets out of the team at Morgan Stanley in a moment. But certainly, when you look at what's going to happen probably today, we're probably closer to those levels, given what Yvonne was pointing out, this big drop. We are poised to see across markets going into the open about 27 minutes away. In terms of earnings reactions, so companies like Kuaishou and Xpeng reported earnings yesterday. A couple of hours ago, it was ZTO actually, reporting earnings. And coming up today, you have HKX and Geely is coming out with earnings today. 45 billion in 30-year bonds will be auctioned and sold today. We're looking at also Tesla suppliers like CATL, of course, listed onshore gold mining stocks on the back of gold remaining a key anchor, if you will. 2,500 still on spot as far as gold is concerned, but not on your screens. Perhaps more entertaining, likely than markets will be today. There is a Olympic parade of Hong Kong athletes. There's a bus parade across the city in the next hour, but they're sneaking that in.
Yeah, and the President Xi Jinping also was shaking hands with the Olympians in China as well, which made some social media waves as well. We'll get to that in just a little bit in our China brief. Let's bring in Ken Wong first, Asian equity portfolio specialist at Eastspring Investments. We've gone from a meltdown a few weeks ago. Now we're seeing a bit of euphoria, now a bit of a pause.
Yep.
What should I do with equities now? Stay invested?
Yeah, we believe that equities is still very good place to invest, especially Asian equities, right? The belief is that with potential U.S. dollar rate cut, coming soon, that Asian equities will start to see a bit more of an interest and a bump up in sentiment. We've seen that with the currencies already. Over the past few weeks, we've seen Asian currencies gain, and as a result, potentially, if you start to see more of a FX flow heading back into this part of the world, then there are going to be specific markets that does stand to benefit as a result.
We had Goldman Sachs on, I think, a couple of days ago, Tim Mo, and he mentioned stick with the winners, specifically Japan, Taiwan, and Korea. How do you feel about those calls?
Yeah, but we feel that India is also a much better position. Those three countries you said earlier, they've done well, but the fact is that they're also very exposed to the U.S. economy. Okay. If you have a weakening of, let's say, overall consumption in the U.S., those countries are going to be deeply impacted. On the other hand, India is very less exposed to the U.S. market, especially the U.S. consumers. And in the case where, specifically, if you do get a bit of a softening, let's say, retail numbers coming out of the U.S., then, India should definitely, I would say, be a bit more immune to what's happening, sort of on the other side of the world.
So that call, is it based on just the growth concerns? But what about AI? I mean, what do you look at when it comes to valuations, positioning now? I mean, there's so much debate about whether these AI investments are delivering revenue growth, might have peaked as well. Does that mean when it comes to Asia semis, we're not going to get the same sort of risk reward as we did maybe a few months ago?
Yeah, I would say that, you have to be a bit more careful, in particular because of where we are with the whole AI trade and, it's been going on for so long, that if and when, you start to not meet expectations, then there's going to be quite a bit of unwinding of positions based on overall sentiment. Now, of course, there are still going to be potentially suppliers in other parts of the world, not necessarily in Taiwan or in Japan or South Korea, that hasn't really gone up as a result of that. There's a lot of, China A-share stocks. David talked a little bit earlier about, sort of the onshore markets. That potentially could be an area as well for investors to look at. There are still very much some untapped, sort of AI supply chain companies which are out there that investors could look at as well.
Yeah. Okay. Well, that takes us back. You don't seem fully convinced about AI short-term as a tactical trade. So take us back to India then. What characteristics does this market have that you think provides the best shelter right now? Either, even if we don't go into a slowdown in the U.S., why India still?
The domestic fund flows. I mean, we've seen record domestic fund flows heading into Indian equity markets for the past few years. From 2022 all the way to now, we've been getting sort of record highs every month when it comes to fund flows going into the Indian equity markets. Not only that, but we're also seeing a lot of institutional investors domestically in India also investing. Foreign investors in 2022 pulled out some money because there was some fairly good gains where they wanted to cash out. But then they started to continue to see that Indian markets continue to rally. And we started to see record inflows from even foreign investors in 2023. And now during the first 6-7 months, those inflows have continued for all groups of investors. And don't forget, we see a lot of similarities. When you have a large domestic investor base, I use this as a comparison to what we saw in China in the Shanghai market in the early 2000s. We saw huge gains when it comes to the Shanghai market in that early 2000s period where the markets were up, were 30, 40, 50 times earnings because specifically you had this large domestic investor base that continued to put their earnings or put their savings into the domestic stock markets.
That sounds like a bubble, though. I mean, we were talking earlier, so I made this chart of the Shanghai Composite price, and to your point, we reached 60 times earnings in the 2000s.
Correct.
How close are we to that peak if you're using the India example?
Well, India's only at 25 times earnings. So we're not
on
anywhere.
Large caps.
Correct.
But on small caps, we're
correct.
Closer.
Small caps were 30 some odd times. So again, but generally when you're also looking at it as a whole, large cap still is a more dominant play, right? So ultimately, you're still some on that 20 some odd times earnings. So we're not at that 60 times earnings. But more importantly, you have earnings also supporting that.
Right.
So, even a strong rise in prices, if it's actually being supported by strong earnings growth, let's say for this year, for next year and beyond, there's absolutely no reason why we can't continue to see this rally in India.
So what do you buy in India? I mean, if you take a look at what sectors are exposed to the U.S., it's the IT sector. That's
correct.
Probably. Do I just avoid that part?
You do, because right now, you think about it, the IT services sector has started to weaken a bit, and it's weakened for the past couple of years. So the fact is that we're actually underweight IT services companies. But when you look at some of the areas, financials, the banking sector still looks very attractive because of the strong growth we're seeing. We're still seeing 15-20% earnings growth for the financial sectors. Then in particular, I would say one of the up-and-coming sectors is in real estate. there's a lot of actually real estate companies in India on the IPO pipelines. We have a huge pipeline coming through. So in the next couple of years, we're expecting to see quite a bit. Right now, real estate only represents about 1.5% of MSCI India. Now, if we look at China as an example, 20 years ago, that's when you started to see a lot of real estate companies listing, and you started to see really that strong rise. So there are going to be definitely opportunities in some of those areas. In some of the consumer names, especially on the discretionary side, are also places where we're looking for opportunities as well.
What about China?
In China, I think right now, a lot of people are sort of looking at this kind of range-bound type of event. We talked about the HSI a little bit earlier. Yeah. It's kind of hovering around this range and, goes up a few days, but then it comes back down a bit. So, right now, I think we're mindful in terms of looking at earnings, looking at specifically how companies put forth. But, right now, we're focusing a bit more, I would say, still on some of the yields, some of the dividend plays. I think that's where the market has been for the past year, year plus, actually. And, looking for opportunities in some of the growth names. But again, the housing sort of issues, that continues we need to see improvements in that. And if we do see improvements in that, potentially, maybe a better overall investor sentiment, driving up consumption. Those are, I would say, key things we need to see in order for us to really strive to really want to go forward to more growth-related stocks in China.
The earnings season, though, for tech, what do you make of it so far? Has it been improving in terms of the fundamentals, or do you think things will still be a bit uncertain? I
think you got to look at specific areas, right? E-commerce related, some of the internet related. Those have, I would say, some have actually been a little bit above expectations. Mm-hmm. Some of the consolidations in terms of competition, that's also helped. You're getting a bit more share buybacks as well, from some of these companies. So these are all important aspects, which should actually help the sector going forward, especially if we don't get any, I would say, negative policy, headwinds, which could impact the sector like what we've seen before.
Okay, Ken, thank you so much.
My pleasure.
Ken Wong there, Asia Equity Portfolio Specialist at Eastspring Investments. Right, okay, we'll take you straight back to the U.S. Specifically, though, this is not in Chicago where the Democratic Congress, of course, the DNC is taking place. You are looking at Kamala Harris. She is at a campaign rally in Wisconsin. Just keep that in mind. And as we take you now back to, of course, live pictures separately at the Democratic National Convention, where it is, of course, a very big week in that build-up to, what today? Wednesday, so 2 days from now, roughly speaking, is when we will be hearing, as scheduled, from the Democratic presidential nominee.
Yep, Barack Obama set to speak today as well on day 2. Plenty more to come. This is Bloomberg. All right, we're just about 16 minutes away from the open, and futures are still pointing a little bit on the negative side here this morning, still tracking that Yuan strength that we've seen at 712.02. We'll see what this fix looks like here today, but the survey is suggesting maybe we'll see a print about 713 or so. We've seen the central bank, but for the most part, keep that rate pretty steady, that fix there, just despite all this weakness that we're seeing in the dollar of late here as well. So certainly that's one to watch. There was an interesting economist out of China from Bank of China International that was talking about, the renminbi might actually soar if we continue to see this unwinding of this carry trade as well. That's a bit debatable too. People have been saying, look, that yuan strength we've seen, we haven't seen it even close to what the yen did just a few weeks ago as well. But your reference rate is coming in 713.07 against the dollar.
Yeah, 7 pips above the median estimate, dialing back support for the currency now. Fixed support lowest in over a year. That's a red headline crossing your Bloomberg terminals as we speak. That takes us now into the broader eco conversation, and China might actually have a new funding option for local governments to buy unsold homes as the real estate crisis shows little signs of improving. Now, sources have told us that Beijing is mulling allowing local governments to tap bond markets to fund their home purchases through these special bonds. Let's bring in Stephen Engel, our Chief North Asia correspondent, to tell us what we know about this potentially new funding option.
In the last couple of months when the three of us talked about these special bonds that were going to be issued by the central government, perhaps to alleviate the burden on the local governments to raise funds to fulfill the big plan to buy up a lot of these unsold homes and then convert them into affordable housing. And the big question is how are they going to pay for this when the fiscal positions at the local government is so stretched? right now, those special bonds that have been issued for the local governments, they essentially have to use that for infrastructure projects or green or environmental projects for the most part, not necessarily buying up the homes. Now, sources are telling us it could be switched to that mandate as well. You can use these, you can issue special bonds and use the proceeds to buy up these homes to fulfill this this plan to buy up unsold homes. But the problem so far right now, only about 8% of the 580 billion yuan available from existing rescue funds, not just the special bonds, but the rescue plans, which haven't necessarily materialized to date, they haven't been tapped so far. Only 8% of all that has been tapped so far, essentially because the high-profile initiative to backstop the home purchase doesn't make much financial sense. Rental yields in China's Tier 1 cities, Dave and Yvonne, averaged just 1.4% last year in 2023, compared with the PBOC's relending rate of 1.75%. So certain plans are not working. People are not the local governments are not seeing the return when they are fiscally stretched already. So again, this shows the urgency in Beijing. They need to find a way to not necessarily end this property crisis, but find a way to put a floor on it.
Yeah, and you're talking more about some of the concerns of the property market, but really there's a lot of movement in the FX markets as well. We talk about this yuan strength and perhaps even concern among FX regulators about it recently. What steps are being taken to really gauge?
Well, the foreign exchange regulator, SAFE, State Administration of Foreign Exchange, does regular surveys of banks to get a good sense of what their clients are doing, okay? Now, through, of course, this year, and we can bring up the charts of how we've seen onshore and offshore yuan this year. So far, of course, with the King dollar has strengthened about 2.6% or 2.5% through about July 23rd. And then, as you were talking, Dave, it's reversed that in August. It's, gained about 2%. Now, of course, authorities have been relying largely on exports to fund this recovery. And what have exporters been doing? They've been holding on to those dollars because converting it back into yuan hasn't made any sense. Now, the SAFE, the State Administration of Foreign Exchange, wants to get a good sense of what exchange rate they're converting it into yuan, because that's what we've seen. We've seen the change into converting those dollar proceeds that they get from exports into yuan now, and they don't necessarily want a very, very fast appreciation because then that stalls that export-led recovery. So it's interesting to watch to see how far they do allow the yuan to appreciate, and they're going to be surveying and canvassing the state banks to see what their clients are doing.
All right, Steve, thank you. Our Chief North Asia correspondent, Stephen Ingles there. I just want to recap what we've been talking about with that PBOC fix here today. So setting that fix really broadly in line with expectations for the first time in more than a year. So before we've seen that pretty wide gap now, things are narrowing a little bit. What do you think that tells us really, Dave?
Yeah, well, because they really did not... When the renminbi was weakening, they didn't really, to your point, right? They did the opposite. They anchored the currency. Now it's going the opposite way. What they're doing is they're not adjusting the opposite side. I'm working up a chart right now just to look, how the sausage is made. And we will show you the chart on the other side of this break. And it shows you the narrowest gap between the midpoint and the median estimates of the market have basically disappeared to underscore the red headline you see in the bottom of your screens. The opening bell, 10 minutes away. This is the China Show. Okay, welcome back. Some breaking news right now. JD.com collapsing in your pre-markets, down the most in about 10 months or so. This is on, news here that Walmart is looking to raise some money by selling its stake in JD.com. It's seeking $3.74 billion, ending this 8-year partnership, of course, with the company. That said, of course, markets are reacting to this, too.
Yeah, certainly we'll watch that one as well. But yes, tech certainly might be on offer here today, just given what we've been seeing, some of the earnings from XPeng and the like here today as well. Let's get us back to the U.S. election, and we're about to hear from the former U.S. President Barack Obama, who will take the stage on the second night of the Democratic National Convention in Chicago. Kamala Harris is already leaning heavily on Obama's former staff and strategy in her bid to win the White House. Let's bring in Bloomberg's Vonnie Quinn in Washington. Vonnie, I was in Chicago back in 2008 when Obama won, and I still remember how electrifying that city was. I mean, are we able to actually recapture that some sort of magic? There's a lot of comparisons now about then and now.
That's the hope, and that's what the Harris campaign seems to be going for, Yvonne. You mentioned the hires, definitely many of the important hires from the Obama campaign era, right? So David Plouffe, who ran his 2008 campaign, Stephanie Cutter, an advisor, also the communications director, Jen Palmieri. You'll remember all of these names. They're so familiar to us. They are essentially the team that sort of re-elected the only other person of color who has ever been in the White House. So it's perhaps no wonder that if they have that expertise, that they should also be on the Kamala Harris staff. Now, the question is, will they get along with the people that are in the Biden headquarters, which had turned into Kamala Harris's headquarters in Delaware? That's to be seen, but obviously, you know, the unification of the party continues apace, and this should add momentum. It will also hopefully, and this is what the DNC and the Democrats are hoping, re-energize that sort of multi-ethnic and multi-generational coalition that did elect Obama, not just the first time, but the second time when it was a much more difficult election after the great financial crisis. And so obviously the ticket is hoping to reach out more to people of color, may have been turned off just slightly over the last few years. The youth vote, we've seen that with the influencers and suburban women and everybody else that had been perhaps turned off, particularly before Joe Biden actually pulled out of the race.
Vonnie Quinn, thank you so much. Vonnie there in Washington for us. I believe Chuck Schumer is speaking. Bernie Sanders is next, of course, at the DNC. Right, going into the open today, 5 minutes away, under 5 minutes away, and we are bracing for losses or sharper losses than we are seeing across the region following that massive drop in ADRs, China ADRs overnight. We're poised for 3% declines on the HS Tech Index. More in the stock market in a moment here. Very, very quickly here, though. The PBOC scaling back its support for the Chinese currency. The fixing a few minutes ago showed the narrowest gap to market estimates going back almost a year or even a year back or so. So that's the currency story. Back to the equity markets. Morgan Stanley's out with some new targets.
Yeah, it's interesting. When they talk about China, I mean, they've always been quite bearish compared to the street, and they're kind of cutting further a little bit when it comes to those targets for June of next year. So they're still citing deflationary risks out there. There could be that spillover into earnings of China's weak operating conditions as well. So that's why they've slashed the targets for the Hang Seng by 11% to 17,000, MSCI China to 56, as well as CSI 300 also. That target was slashed by 10% to 3,500.
Yeah. And, you know, they're overweight Japanese equities. Indonesia, interestingly enough, upgrade there because of the outperformance given, of course, the IDR. Analyst action to tell you about Kuaishou Tech. Reported some decent earnings, getting a cut there from BOC. We'll look at the stock reaction when things open here in Hong Kong and up in China in 3 minutes' time. This is The China Show.
Welcome back. You're watching The China Show. We're kind of down the open of markets there, and it looks like it could be a pretty brutal day here when it comes to stocks in Hong Kong in particular. We're already seeing that and feeling that in the Hang Seng. We're down 1% in the pre-market here right now. Obviously, earnings is one to watch, particularly in the likes of tech. We're already seeing quite a bit of movement when it comes to the likes of Kuaishou. Earnings related, JD.com not so much, but the news of maybe Walmart cutting that stake or selling that stake certainly is driving things lower. And then we've got to talk about the EV sector as well. Yeah,
with Xpeng reporting losses and the guidance from Xpeng also coming in, I think 700 million renminbi below the estimate for market. So there's that. There's obviously guidance coming through as well. A couple of other earnings to tell you about today. Geely, Xiaomi, and HKX are on tap today. And speaking of onshore markets, that is the preference right now from Morgan Stanley with a 3,500. That's the new target on the CSI 300. We also have some supply coming through in the form of 30-year bonds. 45 billion will be auctioned out later today. Let's change the page, please, and have a look at what we're seeing across Hong Kong. And you compare the losses coming up on your screens to losses across Asia, bottom of your screens. And you do see, of course, this underperformance we're seeing, particularly in tech. And every single one of these big names, bottom of your screens, is seeing some real downside today. Tencent, Alibaba, HSBC, in case you missed it, of course, one of the news that hit yesterday was the bank is said to be looking at placing its business in South Africa on the chopping board. JD.com, that's the big one today. Walmart said to be looking to raise money by selling their stake in JD.com. That's really weighing heavily on the stock. In the opening minutes, we're back below 100 Hong Kong dollars. We're down $12. That's 11%, give or take. Xpeng, we talked about this. Revenue missing estimate, still a net loss for the company. Kuaishou, though, interestingly, some weakness coming through as far as the e-commerce space is concerned in streaming, although when you look at net income, actually more than doubling, I think 2.6 times what we saw compared to last year. But e-commerce sales in the midst of weighing on markets. And yeah, just a list of some of the big names coming out with earnings later today.
Yep, and we got some news on the EV sector as well, not just when it comes to what to expect in these results, but the European Union says it plans to introduce an additional 9% tariff on Tesla cars built in China. The measure could take effect in November and aims to counter subsidies that Beijing provides to the industry. The Tesla rate would be lower, though, than the 17 to 36% hike proposed for fully Chinese automakers. And it was kind of the same with some of the ones that were proposed before for some of these Chinese EV makers. That was slightly lower than what was proposed a few months ago as well. Let's bring in Bill Russo, founder and CEO of investment advisory firm Automobility. Bill, it's always great to have you. Given a busy earnings season in China, let's start with the earnings side of things. It seems like this price war continues to really weigh on the Chinese EV sector, whether it's what we saw in Xpeng. You know, that revenue guidance wasn't very, very strong. But it was also very mixed, right? You know, solid margins overall. They also were able to kind of cut some of their losses as well. I mean, what's your take so far on the EV sector?
Well, the China EV market is a hotly contested market, has been recently affected by significant down pricing, led by initially last year Tesla taking that action, followed by virtually everyone else. This year, BYD. But it's happening in an overall weak market. So what you have is a market that is flat, if not declining, in the aggregate, and shifting to EV. EVs year over year are up by a third of what they were last year. And if you're trying to stay in that game with so many competitors, pricing becomes a weapon. And unfortunately, what that does is that eats into your margin. And I think that's what you're seeing and reflected in the numbers.
Bill, do you see at least a semblance of a path to profitability for some of these loss-making EV players?
Well, I think we're in the early game, right? So it's a war of attrition. Let's make sure we survive first. And you've got a dominant player here in China called BYD that takes about 34% of the market. So it leaves, I think, a lot of weaker players. Tesla even struggles domestically to grow its sales. It's down year over year from last year. So I think everyone's fighting for kind of position, and price is the weapon right now to make sure that you can sell enough volume to be able to stay in the game. And unfortunately, what that does is it actually, the price war is cannibalizing the gasoline-powered vehicle sales rapidly. I mean, ICE sales are down year over year in China.
How do you look at the second half? I mean, obviously, you talk about the price war. I mean, can a strong model cycle help things in any way? What are you looking at in terms of, you know, the model cycle for the rest of the year now?
Again, there's a lot of companies competing for the market. There are segments of opportunity. The extended range EVs, the plug-in hybrid segments are the ones that are growing. BEVs are actually flat year over year, and ICE is significantly down. So unless you're in the hot growth segments, I don't have any reason to be optimistic. If you're a pure BEV company, and I'm talking Xpeng, NIO, Tesla, you're in a weaker condition, and you're fighting in order to maintain whatever position you have against a very strong set of price competition. So your margins are getting eroded, your growth isn't there. So I think that's the outlook for the second half. Unless you have an extended range hybrid vehicle, that's really the only growth segment left. And you have to really rely on exports. China year over year in the export category is up 29%. So unless you have a significant component of your business that's going outside of China, there's really no reason to be optimistic.
Well, Bill, on that note, based on your conversations there on the ground with executives in the auto industry, what markets are these Chinese car makers looking at? Anecdotally, we hear Southeast Asia, for example, is a place to target for more sales. To be able to hedge themselves against tariffs in one part of the world and this price war that's happening domestically.
Yeah, and first of all, I think the thing to keep in mind, the exports in China significantly growing. It's going to be 6 to 7 million units of exports this year. It was already the world's largest automotive producing exporter last year at 4.9 million units. So we're going to see significant year-on-year growth. Where is it going? Number one market is Russia. China took the volume that the Europeans gave up, and it's mostly gasoline-powered vehicles. Number two market is Mexico. You have to go a little bit further down the list, and you'll see there's a heavy aggregate component of the global south, what China calls the global south, which is Oceania, the right-hand drive markets of Southeast Asia. And you've got some strong players there. You've got SAIC's MG brand. BYD is building capacity in Thailand. So you're going to see Chinese companies with a weak domestic market prioritizing and going aggressively into the world markets. And EU is certainly a prize that is for the Chinese companies to be targeted. And a lot of the EVs that China builds that are exported are actually heading to the European Union.
So how are you looking at, we got a little bit more insights on what these EU tariffs might look like for the EV sector. Do you think what we're seeing from the EU combined with the U.S., is that only going to slow down China's dominance in the supply chain, or do you think it could actually stop it?
No, it won't stop it. It will accelerate it in a different way. Companies, first of all, it will filter out some of the weaker companies that can't build capacities out China. Thing to keep in mind about it's a speeding ticket. The speeding ticket, by the way, is less for the two companies that have done the most made in China exporting to the EU. Tesla, who you just mentioned, got a 9% rate on top of the 10 that existed before. BYD was the second least penalized. So the two companies that combine for most of the EV exports get the lowest speeding ticket. So what the EU is signaling is they don't want made in China exports. They would rather have the Chinese supply chain and the Chinese capacities moved into the European Union. Tesla, you've got a factory in Berlin. Why not build your cars here? BYD, you're going to build a factory in Hungary. You like that. You get a lower speeding ticket. So it's actually an invitation for Chinese companies to bring their capacities closer to the European Union.
Well, Bill, the next question I have then is, which of these car makers, apart from the bigger ones and the more successful ones, actually have the financial capacity to put in additional capacity in Europe when a lot of them are struggling domestically with excess capacity? I know it sounds like a strange thing to put together, but why would you invest in more capacity if you have, Yeah, let me answer that very straightforward. Not everyone loses money. Tesla does not. BYD does not lose money. They are the dominant players in the EV game. The EU does want to electrify its transportation network. They need the world's biggest superscalers of electric vehicle technology and their supply chains to be closer to the EU. So I think this is a strategically structured tariff to encourage localization. But there are other companies that are doing pretty well. SAIC, I mentioned, with the MG brand, already has about a little bit less than 5% share of the European market. Chery has done very well in their international business. And there's a company called Leap Motor that partners with Stellantis and will be building vehicles in the European Union. So there are exceptions here, and there are companies that will invest. And the path that Bill, that China has taken, I think we went from less than 10% EV penetration to over 50%. As markets like the EU want to follow that path, are there lessons you think, Bill, we can learn from China as being the first mover? That are there things we only discover, industry trends that emerge once we hit these very high penetration rates for EV? What can the world learn from China?
Yeah, well, a couple things I can learn. First of all, and by the way, this wasn't China's lesson, this was Henry Ford's lesson. In order to make the motor vehicle or the car, in this case electric vehicle, popular, you need to make it affordable. And Henry Ford did that by vertically integrating supply chains and mass producing cars. The 21st century equivalent of that is BYD. Obviously, Tesla is sort of in that category as well. They were the pioneer, but BYD was the one who really scaled the technology needed. That's the upstream part. The downstream part is you got to pay attention to the infrastructure. You got to give people who are used to buying and using a traditional car with the convenience of finding fuel. You've got to give them the assurance that they're going to be able to find a charging facility. And Tesla did that with superchargers. BYD's doing it with hybrids. There's ways to bridge the pain point of the transition to EV, but I think it's price. The price is mitigated with supply chain and vertical integration and scaling. China can help the world do that if you allow it, or if you structure a policy that allows it to invest so that it's some of the technology that China now has a controlling interest in, some of that can come back and benefit the rest of the world.
Bill, thank you so much for the insights and the time, as always. Sir Bill Russo there, Automobility founder and CEO, joining us out of the mainland today. Right, several big movers across these markets right now. So the big four to the downside on the HS Tech Index. Kuaishou, JD.com, on the back that Walmart report that Walmart will be looking to raise some money. Kuaishou is an earnings story. Xpeng ditto. NIO also being sold off 4.6%. HS Tech down 2.5% in the opening 12 minutes.
Yep, and coming up next, we're going to discuss more of China's overcapacity woes and why President Xi's old solutions to rein in excess production may not work this time around. This is Bloomberg.
Right, welcome back. The Wednesday session isn't shaping up in a very good way right now, so let's take a step back and have a look at the big picture. We're talking about some of these overcapacity issues right now. And as we've been reporting, the EU is actually advancing its plan to tackle what it sees as, of course, unfair subsidies in the EV space there in China with higher taxation on imports here. Now, it's part of this wider Western war and alleged Chinese industrial overcapacity. But Bloomberg Opinion columnist Shuli Ren says China is suffering too as it overproduces steel, batteries, and also motors.
Yeah, Shuli joins us now. Shuli, China suffered a big bout of overcapacity, back in 2012, 2016. What was the solution back then?
President Xi Jinping actually had a good solution. He called it supply-side structural reform, basically to rein in the oversupply in the marketplace. Between 2015 and 2017, China basically shut down about 15 to 20% of steel and coal supplies, and they paid a lot of money. Like the government deployed 100 billion yuan for worker severance pay. They shut down factories, and then they forced a lot of workers to retire a little bit early.
Although I think back then those were mostly state-owned assets,
yes,
right, in the steel sector. Now we're talking overcapacity, and a large part of the private sector footprint. Can we make the same comparison? Will this time, will we see it work this time around? Is my question.
See, that's the problem. Like the Chinese government have been talking about curbing vicious competition, but so far we just hear a bit of a lip service, and we don't see any concrete actions, because that's exactly what you're talking about, David. In the steel industry, half of the production is state-owned, so the government can say shut this down. But in electric vehicles, lithium batteries, solar panels, they're all privately held enterprises. The government could perhaps do some window guidance, but we are talking about private entrepreneurs, right? And then the market leaders like a BYD or lithium battery maker CATL, they're doing pretty well. They're still profitable. And in fact, they think this oversupply is great. It will speed up the industrial consolidation. The weaker ones have to leave, right? So they're not stopping at all.
What's sort of the source of all this, Bill? Why do you think China is so prone to this industrial overcapacity?
This is a good question. I think some of it could be Chinese culture. There is a lot of animal spirit in China. If you see something that's profitable, everyone goes into it. But I think also the China is growing too fast, and all of a sudden, new industries come up. We're not just talking about EVs. Everything, fresh milk right now also has oversupply. Milk tea chains. China has 400,000 billion of them. Like the problem is Chinese entrepreneurs don't really know how to estimate the total addressable market. They just think the sky is the limit, and the Chinese economy is growing too fast.
They're momentum traders.
Yes, they are very, very momentum traders.
All right, Shuli, thank you. Shuli Ren there, our Bloomberg Opinion columnist with her latest column as well. And the world's biggest shipping centers are also getting caught in the crossfire of intensifying geopolitical conflict. That's our today's big take from Bloomberg, looking at how ports have turned into strategic battlefields as global powers use them to defend their economic interests. Our senior economy and government reporter James Mager joins us from Beijing with more on this big take. And, James, ports, largely are under noticed, but I guess they are a pretty critical point in global trade. What are some of the trends that you're seeing globally right now? How are they changing, and how are they working differently?
I think ever since the pandemic, but even maybe a little bit before that, people have been paying a lot more attention to ports in ways that they hadn't in the past. When you suddenly saw massive queues of ships off ports in Los Angeles in the U.S., because capacity in the U.S. wasn't high enough to suddenly deal with this increase in demand for goods from China, and that followed through to inflation in the U.S. and Europe, where because there was so much of a backlog of shipping capacity, people weren't able to buy the things they wanted as quickly as they wanted to. Suddenly people sort of became aware of these massive ports all around the world that are actually the center of so much of global trade, and then as well, there's some ports around the world have also become part of the geopolitical tensions, rising geopolitical tensions, specifically between the U.S. and China. So China is the home to 7 of the world's 10 largest ports. Chinese companies also have big footprints overseas. China is a massive trading country. They have a huge shipping industry, and they also have stakes in lots of ports around the world. Darwin Port, for example, in Australia. You've got Piraeus Port and other ports in Europe. Chinese company just built and is operating this new port in Peru, which is the biggest and port on the Pacific coast in South America. So the U.S. is concerned about those kinds of things. We're rightly or wrongly leaving the question of that aside. The U.S. is concerned about does China have too much control of global shipping, and so those kind of questions of do we have enough capacity to ship the goods that we need fast enough? Who is in charge of these ports? Are they set up properly for climate change and decreasing carbon emissions? Because shipping and the whole shipping industry is a very, very dirty business. These are the kind of questions that now ports around the world are sort of having to grapple with, and they're in so much more political focus, and that this is becoming a really sort of big issue for a lot of them.
Yeah, well, what changes are we then seeing, James, when it comes to upgrading massive port infrastructures across the country?
I think the first thing you're seeing new ports. You're seeing, as global trade, globalization is not stopping. As global trade is increasing from more and more places, more and more countries are having to build new port infrastructure to deal with the massive ships that move stuff around the world. So India is building a big new port, which will finally allow the largest container ships in the world to stop in India, whereas previously they've had to stop in places like Colombo and Sri Lanka, and then transship onto smaller ships to get to India. As I mentioned, there's this new port that's open on Peru, which will be the biggest port on the Pacific coast in South America, and will cut shipping times from Asia to South America by about 10 days. So there's a huge cost saving there for people, both exporters in South America, but also exporters in Asia and other places that want to ship to South America. Another thing you're seeing is as I mentioned, trying to deal with or mitigate climate change and to reduce carbon emissions. So you're seeing more and more ports are using EV trucks to move things around the port. You're seeing more and more ports using automation as a way to speed things up, become more efficient, do things cheaper, but also use less energy. So Singapore port, for example, is planning to become totally automated by the mid-2040s. And other ports in China are also doing the same. Qingdao Port, for example, has a big project with Huawei, and Tianjin Port as well have big projects with Huawei to increasingly automate their terminals to become faster and to reduce emissions. So these are the kinds of things we're looking at. And then also, as I mentioned, the geopolitical kind of questions. Who's in control of these ports, and what does that control actually allow countries of concern to do or not do, I think will become even more important questions. You're already seeing questions in the US being raised about, should we be buying port cranes from China? Are port cranes a security risk for the US economy? Somewhat of a strange question, but that's some of the stuff that's actually, that's becoming a political issue, related to this kind of trade.
Yeah, I mean, the fact that we are asking already these types of questions phrased that way, James, right? James Mager, thank you. Our senior economy and government reporter in Beijing for us. And in fact, you can read about today's big take on the terminal. NI Big Take is your function for clients, or head, of course, to Bloomberg.com, and you can use some of the search facilities there on the website. There we go. This is Bloomberg. Right, so another check of markets, and as you can see, we're looking at declines. We're coming off lows of the day, so these sort of declines are not. I mean, check your charts. Just don't check your horoscope just yet. We're not at that point where we need to go into the voodoo of stuff here. 12% drop in Kuaishou. That's an earnings story. You're also getting a massive drag from JD.com, which is also down by double digits, not about 10%.
Yeah, obviously on that Walmart planning to exit that stake, or at least sell it. So more on that coming up, plus the world of FX with Charu and Chanana. Welcome back to the China Show. Here's a look at the HSI just a half hour into the session, and you are seeing, mostly speaking, declines here in Asia, and really we're taking a bit of a breather after a 3-day rally. So there you go. Hang Seng is down some 1%. A lot of earnings-related things to talk about, whether it's Kuaishou, whether it's Xpeng, whether it's JD.com. That's really kind of dragging on the HS Tech here. We're seeing declines about 3%, sort of mirroring what we saw with the Nasdaq Golden Dragon overnight as well, Dave.
Yeah, in fact, the HS Tech index 3% down. We're looking at double-digit declines in the likes of the names that Yvonne just laid out there. JD.com, Kuaishou, should be up on your screens in a moment here. 30 minutes into the cash market session, and there we go. Look at those declines. Although we are coming off lows a little bit. We were trading just below $100 on JD.com earlier on. That is, I guess, if there's a silver lining, that's it. Xpeng, that's an earnings story. It's also an EV broadly story on these tariffs out of the EU. NIO is also getting dragged down as well from on the back of the latter. Asia ex-China is looking like this. We are down for the first time in about 3 days or so following the move on Wall Street overnight. As you can see, the Nikkei, the Kospi, ASX, and Taiwan are also all in the red. And we're also seeing a pair back here as far as the euro is concerned after it hit cycle highest since 2023. 2-year yield on your screens, U.S. just below 4%.
And you talk about what we've been seeing in FX markets. Renminbi certainly is giving us a little bit more of that spotlight here this morning, just given what we saw with that PBOC fix. So setting that daily reference rate broadly in line with expectations for the first time in more than a year. Dave, we don't have to do the fast math anymore. No. I didn't have to trigger my Kumon skills. It was only 7 pips weaker than estimates today. Here
very similar numbers.
Yeah. What does it tell us, right? Are they loosening their grip on the RMB? Let's bring in Tanya Chen, our FX and rates reporter, joining us here right now. What does this move signal to us, Tanya?
So we've finally gotten here, right? After over a year, it seems. I think you guys did a great job of bringing up that chart, because actually, if you look at where the fix has been in recent days, it hasn't gotten any significantly weaker, right? It's just that the spot rate has really come down towards the fixed level, which means that we're kind of at this equilibrium level that the PBOC really wants. And I wanted to draw your attention to the fact that one thing that we've noticed is that obviously the PBOC really values FX stability, right? And so that's kind of the second question kind of going forward for the yuan. I mean, it doesn't want one-way bets either way, appreciating or depreciation. And so actually PBOC may want to kind of have more of a weaker bias towards the yuan, because, I mean, in an export-driven economy, it needs a competitive currency. That's why you're seeing kind of Goldman and the various other shops are saying the CFETS, the trade-weighted index, is definitely going to be coming down in the coming months.
And I mean, we're just 2 weeks from that short squeeze on the yen, for example, and the unwind of the carry. And if the Chinese currency continues to weaken and if rates, of course, continue to be lower, where is this conversation now? What is the better funding currency? Is it the yen where you got burned, or is it now the Chinese currency?
Yeah, there's so much to talk about in this on this topic. I mean, if you look at the yen and the yuan correlation right now, they're still at like historic highs, right? And so this carry shakeout really did help benefit the yuan. But I think one thing that Macquarie and Rabobank have really helped to point out is that who are the people who are actually shorting the yuan? It's actually the Chinese exporters. The investor base that are putting on these speculative positions are different from those in the yen. And so actually going forward, the yuan will still mainly be driven by kind of these fundamental drivers that we've talked about, weak domestic demand, cutting rates at the PBOC, et cetera.
Okay, so what else do we need to watch out for the renminbi now? I mean, the fix is certainly one thing. I mean, what are analysts telling you about where the direction of travel is going to be?
So I think we've got kind of two camps right now. I think there's a few people who have kind of looked at the yuan and they're saying this is a new range, and you could see the yuan kind of stay range bound before Powell speaks, and you also have kind of like between 7 to 7.2. There are still those who are very, very bearish, and that's why I think there's that second camp that are saying the short CNH positions are going to get rebuilt, right? I think the one thing to kind of be watching out for right now is just kind of where the dollar goes, the pace in which they announce these Fed rate cuts. And those will be kind of the key things to watch.
All right, Tanya, thank you so much. Tanya Chen, there, our Asia FX and rates reporter. Speaking of this, the FX markets, the story this week has been this drop in the U.S. dollar, really against EMFX, right? So here's where you're trading across many of these currencies. By the way, rate decisions today in Thailand and Indonesia. You had data coming through out of Korea, 20-day exports. You have a rate decision tomorrow out of the BOK. Export orders are out of Taiwan, just to round things up as far as the relevance of these currencies on your screens. And the dollar is now, Bloomberg Dollar Index is now, in fact, oversold against, well, the benchmark itself. What is behind this drop in the greenback? Charu Chanana, global market strategist and head of FX strategy at Saxo, is with us to hopefully be able to answer that question. Charu, what is behind this relative meltdown we're seeing in the dollar this week?
Hi, David and Yvonne. Thank you for having me back and with this starting off with this very interesting question. Okay, let's go back to fundamentals and talk about the dollar smile a little bit here. The dollar rallies when you have yields in the US going higher, which certainly is not the case. Now, the Fed has hit a pause button. They're yet to embark on that easing cycle, but they're certainly getting closer to that, right? And the second side where the dollar really appreciates is when you have those deep recession concerns and there's a safety bid that kind of attracts flows into the US dollar. Well, we're not there yet as well. So we're still in that middle part of the dollar smile, which certainly means a little bit of that weakness coming through. And that is obviously, some amount of positioning as well ahead of Powell speaking at Jackson Hole and kind of really, saying potentially that they've had inflation going down as they wanted and kind of, giving a little bit of that victory smile, perhaps. And then kind of, again, setting the room for that September rate cut. But when I talk about the dollar smile, the real irony here is that the dollar weakens in that central part of that smile when you have other global economies really doing better as well, right? And then flows kind of go out. There's a whole risk-on environment as well. And when you talk about something like a euro dollar at 111, when you know that the recession concerns in the Eurozone are certainly a little bit larger than what the US faces at that point, I would really argue here that the dollar weakness has potentially gone a little bit overboard.
Okay, and there's so much debate about whether it's going to be 25 basis points, 50 basis points, either September or later on this year. Charu, I mean, if it's a 50 basis point cut, is that going to lead to more downside to the dollar? Or do you think that markets might react differently?
So the markets are more or less positioned in between that 25 and 50, right? And what economic data has been saying so far, I would say the case for a 25 basis points is certainly bigger at this point than a 50 basis points. In fact, if Powell was really to highlight the case for a 50 basis points at Jackson Hole this week, it would rather, yes, you're right, it would send some warning signals about the economy, which are not yet evident in the economic data. So in that case, I would think that, we move quickly towards the right side of the smile, where there's some amount of safe haven flows that go back into the dollar as well. But I do think that the revisions to the non-farm payrolls data today will be extremely critical. I think probably more so than what Powell would be later on this week. And we really need to kind of, analyze how significant is that downturn in the jobs market. We know the unemployment rate got higher, but the reasons behind that was excess labor supply and not lack of labor demand. So we really need to keep that perspective. But if we were to see a 1 million, jobs kind of being erased from the payroll numbers that we've been seeing, that could send some tremors to the markets today.
You're talking about 1 million. Okay, that's quite a big number. I think last time we had 1 million job loss was during the, and hopefully we don't see that, of course, Charu, goes without saying. What do you think would be the biggest driver right now of FX performance? Do you think it's yield or is it haven flows?
Certainly two very different drivers, right? I think the bigger one of the two that you mentioned is really those, recession odds, or the haven flows, as you call it. I think markets have really come to the conclusion, yes, that the yields are likely going down from here, not at the pace that we've already seen, but certainly maybe settling around these levels now until we get to the start of the rate cut cycle. But I think the ambiguity around the data and whether or not US really faces a recession threat drives more of those flows. So like I said, right, if we were to get a scenario where recession odds were to amplify greatly from here, that would mean a positive scenario for our haven currencies like the Japanese yen, like the Swiss franc as well. But in the case that, this soft landing, that looks pretty much achievable so far until this point, but that remains the case. Of course, things can deteriorate quite rapidly from here as well. But if that soft landing scenario was to stay, then that is potentially a little bit more positive for our activity currencies like the Aussie dollar potentially.
So what does it mean for these yen carry trades? Is it dead? Can it resurrect again, or are there other kind of funding currencies that you're looking at now?
I mean, I would say that, it is going to be difficult to put on those carry trades again. And it is somewhat related to what the Bank of Japan has been hinting. We also hear from Bank of Japan's Governor Ueda later on this week. But, their research paper last night, I think there have been signs that they want to continue on a tightening cycle. Now, whether that is rapid or not is really not the question, because even in the case of some aggressive normalization, the Bank of Japan can only do as much in closing that yield gap that JGBs have compared to the US Treasuries, right? So the bulk of that move is still very much dependent on what the Fed does, and that certainly looks very clear at this time that they're moving closer to the rate cut cycle. And again, we talked about the recession odds. Now, whether or not that picks up or not, it is certainly spooking some amount of volatility in the markets, and that is again not an interesting environment for carry trading. I know you previously talked about whether Yuan could be a favorable, funding currency for carry trades as well. Now, to me, that is a question that if we were to see the amount of speculative short positioning in the Yuan comparable to what we saw in the yen, do you think that the PBOC will be tolerant of that? Certainly, I think I would raise my eyebrows here. So it's very difficult to shift the magnitude of carry trading that we've seen in the yen to any other funding currency at that point, even for the Swiss franc for that matter. We continue to hear concerns, there as well. So I think, it is a time to really reassess, probably have some tight risk management around those carry trading strategies if they've been put in place.
Charu, great to have you. Charu Chanana there, global market strategist and head of FX strategy at Saxo. Still ahead on the China show, the EU puts Tesla in its crosshairs as the bloc moves ahead with plans for tariffs on EVs shipped from China. We have details next. This is Bloomberg.
All right, you're looking at the Hang Seng Tech Index and a breakdown of the movers, and most, as you can see to the downside, fairly substantial losses in some of these big names. It does feel like one of those days where you sort of keep one hand on your pocket, so to speak. JD.com, as you can see, biggest decline here, down about 11%. As sources are telling us that Walmart is looking to exit its stake in the company. Annabelle is here with us on set to talk us through what we know about this potential disposal.
That's right, yeah. So these shares could be being sold here at a discount of as much as 12% to yesterday's close. Walmart is a company we know has had this JD stake going back to 2016, but it's obviously been a very challenging period for the last several years, really, in China's market landscape. You think about just how competitive pretty much every segment is, but online, or groceries rather, are really dominated by those online players like Alibaba, PDD as well. And so Walmart is really up against that. They've really only had one key bright spot, and that's been Sam's Club that offers premium goods. It's a membership model, but its other outlets really are struggling, and it's all about trying to chase those cash-strapped developers. So now what we're hearing is that basically, Walmart is looking to exit its JD.com stake. They could be raising as much as $3.74 billion from this. Morgan Stanley is said to be the broker-dealer handling the offering, but all of this right now is based according to people familiar with the situation.
Yeah, we're watching Xpeng shares as well. I mean, it seems like there was a bit of disappointment in the third quarter revenue guidance,
yes,
but also, I mean, EU tariffs and the like, too.
Yeah, it's really does come down to that guidance. So, I mean, we got the sort of the projection of how many vehicles they're looking to sell. Actually, that came in a bit higher than what Wall Street analysts had been expecting. But when you take a look at the revenue, it's not as good as what had been projected. And so it just tells you that they're not making as much money per sale of each vehicle. And that's really speaks to just that intense amount of price competition. And you were just speaking with Bill Russo in the last hour, and he was just saying pretty much that's the only way you can compete right now is try and compete on price. That's the key weapon in what is a very aggressive auto war in China.
And might this theme show up in, I think, some of the other big companies reporting earnings today? Xiaomi, of course, is a new entrant into this market. Geely, of course, is another car maker reporting today.
I think Xiaomi, because here we're actually expecting for EV sales perhaps to have started to feed into revenue for this last quarter, and it's something that could also help as we start to see a pickup in the overall smartphone segment. So, yeah, Xiaomi actually could report some better numbers off this. But as you say, it does speak to yet another entrant coming into the space. There's aggressive competition, more entrants, and as you also speak to some analysts about, they're saying that really Chinese consumers are very much focused on the technology, and so that's where Xiaomi, of course, can capitalize on its key competitive advantage here. But what else we're tracking? So it's not just Xiaomi, there's also we've got other earnings coming out later today as well from Geely.
Yeah.
One of the names at risk, of course, caught up in this whole tariff war from the EU, and we could pay particular attention to what we get from one of its subsidiaries, Zeekr, because it could actually be looking to build EVs in the EU to try and avoid these tariffs. So just some of the things we're watching for later today. But big week of earnings and also big share price reactions off the back.
All right. Belle, thank you. Annabelle Jewelers there. Of course, as we've been talking about what we heard from the EU, saying that it plans to introduce an additional 9% tariff on Teslas imported from China. It's the next step in the bloc's moves against Chinese-made EVs, which it claims unfairly benefits from state subsidies. Earlier, we did speak to Automobility's founder and CEO, Bill Russo, and he tells us that these latest moves will only slow down, not stop, China's dominance in the industry.
Well, the two companies that combine for most of the EV exports get the lowest speeding ticket. So what the EU is signaling is they don't want made in China exports. They would rather have the Chinese supply chain and the Chinese capacities moved into the European Union. Tesla, you've got a factory in Berlin. Why not build your cars here? BYD, you're going to build a factory in Hungary. We like that. You get a lower speeding ticket. So it's actually an invitation for Chinese companies to bring their capacities closer to the European Union.
And Min, our China correspondent, is covering the tariff story for us and what impact this could have on Tesla specifically.
Well, the stock is not liking it. It was down 0.7% intraday yesterday, and then it was down another 0.5% in the after hours. It has a big impact because China is a very important production base for Tesla. It has that giga factory in Shanghai, which is a humongous factory, bigger than some of its other plants combined together. It produces more than half of its EV from China alone. So it's going to hit its profit margins. That's why Tesla has already hiked prices of its Model 3 that is being sold in the EU, starting from last month by about 1,500 euros, citing these additional tariff burden. The good news, though, is that the EU officials have given them a very small speeding ticket. 9% tariff is less than half of what the other Chinese producers will have to pay in terms of tariffs. The largest tariff is given to SAIC, 36%. That is on top of the existing 10% duties that is applied across the board. The EU officials are saying that Tesla is enjoying this lower tariff rate because they do not enjoy as much subsidies as the other companies from the Chinese government, but they do enjoy an unfair advantage in terms of land use rights, reduction in income tax, the national subsidy that applies to all exporting producers. They also have access to cheaper than market rate batteries as well. So that's why they're getting the tariffs. But of course, they'll get a huge competitive advantage against their other competitors because of the reduction in the tariffs.
Yeah, you had in the board there, China did respond saying that they might retaliate. How could Beijing respond?
Yeah, so far they have already opened up probes, anti-dumping probes into European brandy, European pork. They have previously hinted that they may retaliate in other areas, including agricultural products, aviation, vehicles with large engines, and that could affect companies like BMW, Volkswagen, Mercedes. These are companies that count China as their largest market. So China does have some bargaining chips left in the couple of months leading up to October 31st, when the final tariffs rate will be decided and the tariffs will be applied in November. The current tariff is still provisional for now. It's still subject to change if the talks are successful. And meanwhile, you have the Chinese producers already making contingency plans by looking at how to invest in plants in Europe to kind of bypass all these tariffs.
Thank you, Min Lo, there, our China correspondent, joining us on the latest there. We got plenty more ahead. This is Bloomberg.
Here are some of the stories that we're tracking in this hour here. Hamas says it's keen on reaching a ceasefire agreement with Israel, pushing back on U.S. claims the militant group is stalling on negotiations here. Earlier, U.S. Secretary of State Antony Blinken said Israel had accepted a bridging proposal, and the next step was then for Hamas to agree. A new round of negotiations is slated for Cairo this week, but said, no date has been set.
Our message is simple, it's clear, and it's urgent. We need to get the ceasefire and hostage agreement over the finish line, and we need to do it now. Time is of the essence.
Now, Asian countries are beefing up surveillance for the Mpox virus, with travelers from affected countries being asked to self-report their symptoms. Now, that's after the WHO called it a global health emergency. The so-called 1B strain has reportedly killed more than 500 people, mostly children, in the Democratic Republic of Congo. Now, the Italian Coast Guard says it's unlikely to find any more survivors from the sinking of a luxury yacht off Sicily. Now, it means British tech tycoon Mike Lynch, Morgan Stanley International Chairman Jonathan Bloomer, and 4 others are now presumed dead. The yacht was hit by a violent storm early Monday, with Lynch and his family and associates on board celebrating his acquittal in a long-running fraud case.
All right, taking a look at movers here this morning as well. Earnings related, the like, and also JD.com, which is something that we heard from Walmart. So this is according to some news from Reuters now. So we're thinking about what the rationale was behind this planned or so-called planned exit from that stake into JD.com. They say the deal allows it to focus on its China operations. That's what we've been hearing from Reuters so far, but nothing official from the company just yet. But the shares are still down some double digits. We talk about the EV sector. Really it's about XPeng here this morning. Just take a look at what we've been seeing in terms of those stock. But yeah, we're off some of the lows. We're still 1.6% down. But that, miss on the revenue guidance for the third quarter was what was dragging down the stock here today. Geely Auto is coming up next as well. We're also watching some of these Tesla suppliers, just given the fact that the EU did bring up these tariffs on Tesla, the ones that are imported from China, though you are seeing like of GAN and lithium actually rallying. Maybe there's a sense of relief there that maybe what was proposed previously is still less than what, So what they got was actually less than what was previously proposed as well. So 9% slap or speeding ticket, according to Bill Russo as well. So we're also watching those, including the likes of Santos as well, right? So first half net income missing estimates. So that was a bit of a drag there by about falling some 19% for Santos. The stock is down some 5%, Dave.
Yeah, that's the biggest drop going back to Feb of this year. It takes us back to stock about almost exactly 2 months from now, lowest since June 18 of this year. Plenty more ahead. This is Bloomberg.
All right, 11:29 a.m. in Tokyo. Japanese markets heading to that lunch break here right now. And you are seeing a bit of downside when it comes to equities here this morning. It's really kind of mostly weaker, just given the fact that we've seen equities take a bit of a breather here this morning. Dollar yen also taking a bit of a breather here. 145.30 were flat on the currency. But yes, we are still testing some of the lows of dollar yen as well. So it looks like it's still on the stronger side of things here today. Dave?
Yeah. Nothing more to add. It's a really boring day in markets today. So we'll show you what's happening across Asia, and we'll probably give it 5 seconds before we turn our attention to maybe this non-event also in central banks, but maybe there's something more to talk about as far as that's concerned. On that note, we do have authorities, monetary authorities in Indonesia expected to keep rates unchanged when they meet later today. For a preview of this Bank Indonesia decision, we're joined by our Indonesia reporter, economy reporter Grace Sihongbin, joining us out of Jakarta. Grace, thank you for joining us. Give us a preview here. Why is a hold more likely today out of the central bank there?
Yeah, so for today, Bank Indonesia is still widely expected to hold its benchmark interest rates, as BI may want to avoid venturing into monetary easing too early. The Fed may start cutting in September, but BI might still want to see some more data from the U.S. economy, as well as some more statements from the Fed, which will come later this week, and also ahead of the September FOMC meeting. So BI may want still to digest those data before getting into its monetary easing cycle. The rupiah, however, has improved significantly. It's been on rally this month, up 5% against the dollar, and that called for some analysts to call for a rate cut as soon as this meeting. And foreign capital inflows have also returned, with sovereign bonds seeing more than $1 billion came into the market this month. That's also partly helped by some confidence by the market from the fiscal policy of the next government led by President-elect Prabowo.
Okay, Grace, thank you so much for the preview there. Grace Sihongbin in Jakarta for us, our Indonesia economy reporter, giving us a preview of really some of the factors that Bank Indonesia is weighing here. Up until this week, it wasn't supposed to be the currency, but the currency strength might be giving, to Grace's point, maybe a reason to cut. Maybe not this meeting, but something to consider. The rupiah, we were looking at technicals, Yvonne, is now the most overbought against the dollar in foreign. This is likely the most stretched dollar Indonesia to the downside across the Asia Pacific, among many other things.
You could see that with the Thai baht as well. I think we're heading in similar sort of trends here as well. But yeah, the Bank of Thailand, I mean, there's another source of uncertainty because there's a new prime minister that's about to step in. But it seems like most economists are thinking, this whole pressure from the government for them to cut rates, that's going to keep going despite who this new prime minister is going to be, because, and whether they actually give it or not, I think people are still thinking they might hold on to those rates right now.
That they could hold on as well. And, the additional complication that's, having this new government come into place is really that fiscal push that was supposed to be able to encourage spending in Thailand might get delayed even further. In fact, we just heard from the finance minister talking about how the economy is near crisis, not our words, theirs, and that the Ministry of Finance sees GDP growth averaging 1.9 to 2% over the past decade. Is that a statement of past? Okay, anyway, that's the phrasing so far there. On top of this, we also get, of course, this time tomorrow is the Bank of Korea rate decision.
Yeah, and I think most people are expecting, they're going to be holding this week. But, obviously everyone's trying to time when that pivot's going to come.
When the first cut's going to come, yeah.
Deutsche has an interesting non-consensus call, though.
Yeah. So everyone thinks tomorrow's going to be a hold, except for Deutsche Bank. Thinks that tomorrow might be the window for them to start cutting interest. And I think the same boat of, the Bank of Korea is in with the Bank of Thailand is they're also dealing with high household debt, and cutting rates might exacerbate that other problem. And of course, inflation remains, core inflation is picking up, but it's still benign as far as where you are in the range in the forecast is concerned. So juggling many things, and I think it's a simple way of saying they're probably going to hold.
We'll see, right?
Yeah.
So, the next 24 hours could get pretty interesting as well. So, but this is all before Jay Powell speaks. So I'm guessing they're not going to do too much.
We'll be asleep by then. It's Friday
until we
evening
hear
Asian time.
What happens out of Wyoming. Okay. It all comes down to that, right? Yeah. All right, some corporate stories that we're tracking for you today as well. Fast fashion retailer Shein is accusing Chinese rival Temu of organizing what it calls a coordinated scheme of intellectual property violations. The complaint filed in Washington alleges that Temu steals trade secrets and engages in counterfeiting, trademark, and copyright infringements. Temu has not responded to requests for comment on the lawsuit. Bloomberg has learned that HSBC is exploring a sale of its South African businesses as the lender focuses on Asian markets. Sources say the South African branch business and securities unit have drawn interest from bidders in the region, as well as China and the UAE. HSBC is seeking ways to cut costs and complexity under the new CEO. Eli Lilly shares jumped in New York as a long-term study found patients taking its weight loss drug, Zepbound, or shot, I should say, were 94% less likely to develop diabetes. The 3-year study followed more than 1,000 patients with obesity and pre-diabetes, and those taking the highest dosage also lost almost a quarter of their body weight.
Okay, now more on this Bloomberg scoop. So yesterday we reported, of course, China is considering allowing local governments to fund, the purchases of some of this unsold inventory in the housing market by issuing these so-called special bonds. Now, Bloomberg Intelligence has been looking at this, and we're joined right now by Christy Hung, our senior analyst, to talk us through what this might allow local governments to do. So I think it was back in May where they said we need to deal with this unsold inventory. We haven't really seen a lot of acquisitions just yet. Might this new funding vehicle help?
Yeah, so when I first saw the proposal, I thought to myself, this is missing the point because we have no lack of funding for these affordable home projects. I've talked about here before, the PBOC has 300 billion yuan lending facility targeted for this. The drawdown as of June is just 4%. So I think the biggest problem is that the focus should rather be, how to get local governments on board, because absent lucrative returns for these affordable homes projects, it's hard to get them keen to do these acquisitions. And on the other hand, we have developers, some of them have already pledged the inventory as collateral, so they might not be in a hurry to sell at a discount either.
So what exactly are the hurdles here, and why do you think those acquisitions have been so slow?
Yes, so I've spoken to some developers, and their major complaint is that local governments only want to acquire en bloc, which is a whole building of units with 70 square meter or less. And they also want the building to be close to transportation hubs with supporting amenities like schools, hospitals. And that's not realistic, because if you look at developers' projects, most of the inventories are in half-sold buildings, and most of them are 100 square meter or more because they tend to target demand for upgrades. So I think the biggest hurdle is for local governments to find the perfect project to acquire.
Well, speaking of finding the perfect project, I think in Wuhan this week we did see an acquisition interesting because they took, I think, an office, an SOE, and to turn it into a residential home. But was it the objective supposed to take housing inventory to turn that into affordable housing?
Yes, so we are increasingly seeing more and more of these acquisitions of acquiring commercial buildings. Okay. I think the merit is that office buildings tend to have bigger floor plates. They're easily subdivided into units of 70 square meter or less, and they're also centrally located with transportation links. But then the problem is, you've asked me before, is 300 billion yuan to acquire China's unsold home, is it enough? And now it seems that we're not only dealing with the residential inventory, we're also trying to deal with the office glut in China, and there's a severe glut there. So I think the problem is then, we have more overcapacity to deal with, and more money is required.
All right, tackling a lot of things at once. Christy, thank you. Christy Hung there, our Bloomberg Intelligence senior analyst. Great analysis piece there on the back of our Bloomberg Scoop. We got plenty more ahead. This is Bloomberg.
Right, welcome back. We're continuing to track this massive deal in Japan for the owner of 7-Eleven. And certainly, as anyone who either lives or has visited the country knows, that the convenience store experience is an essential and crucial part of daily life. In fact, 7-Eleven was the first to set up shop about 5 decades back, and one in 6 Japanese people actually now visit a, quote, 7, as they're known every day. So the takeover bid by Canadian firm, of course, Couche-Tard, is raising, concern in a country that has traditionally resisted foreign buyouts.
Yeah, let's bring in our Bloomberg Opinion columnist, Gearoid Reidy. He's been writing about this as well and joins us from Tokyo. Gearoid, I mean, just given there is that concern, I'm just wondering how likely is this deal going to go through then, you think?
Well, there's obviously a lot of factors. I think one of the things, you spoke about in the intro there is that, traditionally we have not seen a lot of takeovers, certainly of this size, of Japanese companies. That environment has certainly changed a lot. The, Japanese regulators and the trade ministry are much more open to takeovers of Japanese firms, both by other Japanese firms or by foreign firms, certainly compared to where the environment was 15 or 20 years ago. However, in terms of this deal, this is obviously a deal that's on a completely different scale. And, as you mentioned there as well, this is a brand that is sort of integral to Japanese society as we know it in 2024. It isn't some sort of, anonymous maker of parts that people don't really know or don't really care about. So I think there might be quite a popular dissatisfaction, shall we say, if this deal advances. Obviously, we're still very early days. We don't even know the contents or the structure of what any deal might actually look like.
Yeah, and I think the most we understand is it's being reviewed by the target. What else in terms of hurdles could scupper a transaction here?
Well, I think one of the very obvious things is the scale of the operations that 7&I has in the US and in other countries where it might come up against regulatory issues. Obviously, the potential acquirer, Couche-Tard, they tried to buy Carrefour a couple of years ago, the French supermarket giant. That was struck down by French regulators. We've also seen reports over the last couple of days that we expect that this deal would also raise antitrust scrutiny in the US, where, as I say, the 7&I has been making huge inroads, buying up all kinds of gas station chains and really making it one of the core drivers of their business over the last couple of years. That's obviously going to run up against other operations that Couche-Tard, is involved in, and other presumably competitors are going to raise concerns there as well. From the Japanese side, we haven't really heard that much, but I think we could expect, as I say, a deal of this size, which could be, in the $80 billion region, is going to get a very close look at from the Japanese authorities, especially as obviously we might also have a new prime minister by the time we get any specifics on this deal.
Thank you, Gearoid Reidy there, our Bloomberg Opinion columnist on, of course, that 7&I story here today. We're bringing back to live pictures out of Chicago where the Democratic National Convention event is underway, day 2. And there it is, Michelle Obama, the former First Lady, also, at her hometown of Chicago, speaking just moments before her husband, Barack Obama, will take the stage. Let's listen in.
The sacrifices our elders made to give us a better future. You see, my mom, in her steady, quiet way, lived out that striving sense of hope every single day of her life. She believed that all children, all people have value, that anyone can succeed if given the opportunity. She and my father didn't aspire to be wealthy. In fact, they were suspicious of folks who took more than they needed. They understood that it wasn't enough for their kids to thrive if everyone else around us was drowning. So my mother volunteered at the local school. She always looked out for the other kids on the block. She was glad to do the thankless, unglamorous.
Here's your China Brief this morning. A look at what's making headlines in national newspapers and trending on social media. And the Securities Times is flagging positive earnings from Chinese semiconductor companies. That is thanks to the AI boom. Its front page report says more than half of 68 firms that have announced first half results saw positive growth. Analysts quoted see upward momentum for the industry as it continues to recover.
Meanwhile, state media have glowing coverage of Chinese President Xi Jinping's meeting with, and you might have seen this across social media as well, the president met with the country's Olympians and the medalists, of course, and as you can see there on your screens. Now, the story occupies more than half the front page of the party's official mouthpiece, the People's Daily. And the president reportedly says the athletes' performance demonstrates national strength, while calling on them to work harder to build China into a sports powerhouse. In case you missed it, the medal tally, of course, the Chinese team won 40 gold medals, 27 silver, and 24 bronze medals in Paris, their best performance at an overseas Summer Olympics.
I think in social media, they were all scrutinizing how long Xi was speaking to each athlete. Yeah. And what does that tell you as well? All right, we got to tell you about this big game, right? We talked about it yesterday. The release of the video game Black Myth Wukong is also enjoying positive media coverage. Global Times calls it a global hit and a milestone for the China-made game. Now, observers told the paper that while video games used to face scrutiny, they're now capable of becoming art and spreading Chinese culture among local and foreign players.
Yeah, in fact, Black Myth, the game is such a hot topic on social media, a top trending topic here on Weibo specifically here. You have 69 million views so far. Users calling on, the Shanxi province's tourism department to launch activities related to the game itself. And Black Myth is reportedly inspired by scenic spots, of course, in the northern Chinese province. And by the way, if you haven't been, it's very, very beautiful, of course, there.
Yeah, so some reactions that we're seeing on social media, right? So, yeah, people are very proud. Right? Finally, my hometown of Shaanxi is making itself famous. Hope authorities will be ready for and use the opportunity to regulate the tourism conditions there. They say, Shaanxi people, are you ready? Stop taking naps, extend those restaurant hours, and let's get ready for this flow of tourism. And finally, my hometown is making headlines not because of coal, but because of a game.
Yeah, it brings to mind, okay, now I'm not aging myself, but I forget, what was that TV series? And then, is it Dubrovnik in Croatia where they have... Game of Thrones, there we go.
That, of course,
that gained extreme popularity because of the show. Anyway, might we see a Shanxi version?
And there's a Wukong stocks that we have to check here today. It's not just Tencent,
yeah,
right?
They're moving quite a bit.
They've been moving for the last day or so, but these are some of the ones that are actually related to the game. All mostly are continuing on with this rally here today after it became the second most popular title ever on Steam within hours of its launch. So this is something that we rarely see, this rapid ascent that may seal its place in the industry. That's according to what they're saying now.
Yeah, the counter-cyclical trade. If you're looking for another weight on that barbell strategy and you need more growth, this is probably it. And some of these big names. Speaking of barbell, speaking of gyms, a big story in Hong Kong today, and we're showing you in a moment here the stock of Champion REIT. Not much reaction in the stock, so this is the REIT actually behind the Champion Tower, which is very close to where we are here in central in Hong Kong. And the story here is this gym chain, it's very popular in Hong Kong, Pure, is being sued because it reportedly hasn't paid rent for 2 months. I think they're being charged now. It owes 1.6 million, this is US dollars, excluding interest, based on court filings here. So it hasn't paid rent, I believe. I'm just looking at my screens right now. For missed payments for rent and management fees at the facilities in the ICBC Tower and Champion Tower, of course, which is literally across the road from where we are. In fact, we have a Bloomberg office too in that building. But yeah, there we go. Not paying their rent according to these court filings.
Yeah, we're still looking at those tech stocks as well here this morning, the likes of JD.com, Kuaishou. So we got a little bit more clarity maybe from this Reuters report of why Walmart is selling that stake in JD.com. The deal allows it to focus on China. The stock is still down some 10%, but we've come off a little bit. Kuaishou as well, still looking like those results are weighing on the stock here this morning. We're watching these Korean EVs as well. So obviously, there's these EU sales bets. There's a bit of sector rotation into this space as well. So battery stocks are doing quite well in Seoul right now.
Yeah, LG Energy, Panasonic is the Japanese supplier, of course, of Tesla. Since we're talking about that, CATL is, of course, the big one listed in China as well. So apart from this and apart from some of the Chinese tech that we talked about here, the other big story, of course, is this pause we're seeing in the global bull market. So after successive days, S&P 500 did come within 1% of an all-time, of a new record. It paused overnight. We're seeing that play out across most parts of the region today, where you have the likes of the Hang Seng Index down 0.7%. We're coming off lows there. New Zealand, and we're looking ahead to a couple of rate decisions in the region today, in case you missed it. So we're looking at Bank of Indonesia, Bank of Thailand, both expected to keep borrowing costs steady. And, of course, this time tomorrow, we'll be poring over the Bank of Korea rate decision, where the expectation is, apart from one at Deutsche Bank, most economists think the Bank of Korea will hold rates steady. And, of course, this time tomorrow will be, of course, that press briefing out of the Bank of Korea.
There is some things to watch before Jackson Hole, though. Everyone's kind of citing what we might hear in the U.S. when it comes to the Bureau of Labor Statistics, the quarterly census of employment report, that there might be some pretty massive revisions in what we saw in the previous quarter. And everyone's talking about soft landing, but some are saying we could talk about up to 800,000 or so fewer jobs than what was previously reported. So what does that mean? Does it challenge the view that we're seeing in this market if we see these massive revisions as some are expecting? Some big banks are expecting that here today.
Yeah, okay, so it then puts into context, our guest is our Charu Chanana, and her talking about how it's important to watch these revisions. I think that's what she was referring to, the jobs numbers coming through, if we do get substantial revisions there. But in any case, of course, I would imagine, and this is speculation on my part, I would imagine before Jay Powell commits to anything, if he does commit to anything in Jackson Hole, would have a better gauge of what the data looks like, more than, I guess, your typical person.
But they've changed their focus, right? It's a dual mandate now. It's not just about inflation targeting. It's not just about, that story seems to be a little bit less of a concern. But then when you take a look at the jobs numbers, that could be the next kind of wild card that people are talking about here as well. So that's one to watch here before we kind of count down to Jackson Hole. We also are counting down to Barack Obama, the former president, is going to be speaking at the Democratic National Convention in Chicago. We're still hearing from his wife, the former First Lady, Michelle Obama. We'll leave those pictures there. That's it for us here in the China Show. We have Bloomberg Markets Asia is coming up next.
As we embrace this renewed sense of hope, let us not forget the despair we have felt.